Hello guys, today is the 26th of September 2016 and welcome to our daily dose for this Monday morning. This morning we're going to have a quick look at the opportunity that's presented itself in the DAX, the German 30. We had some IFO numbers come out this morning and we saw quite a large reaction here. So I think around the open here we were around about the 600 handle and then the markets moved all the way down to this 10,430 region. Okay, so basically from as we know, based on our previous analysis, our double top didn't really work that well. It worked out for a little bit, but it didn't go the full stretch of what we were hoping for. So, kind of look on a large time frame here on the daily. I've put in some lines here just to show. You can kind of see here that we've been in quite a distinct uptrend since July, going up. Well, since the beginning of the year, really, but it's kind of ebbed and flowed. But okay, since the beginning of the year we've been going in this bullish direction. The market came up to this double top. We had this region here, break below, had this aggressive move up last week where the market's come all the way back up, and the market came off quite heavily today. So it's one of those things. So kind of go down the lower time frames, we can kind of get a better idea of what we're actually trying to look at here. So for those of you who got in on the IFO numbers today, good job. Now this is one of the only kind of opportunities that I would stipulate using a stop entry order. It's quite an aggressive strategy anyway, but if you were looking to you can kind of see the markets come up quite aggressively here. It's kind of the move back down has been quite slow and not that distinct. As I said in the previous video, we don't tend to find markets that tend to go right up vertical and then come right back down themselves almost instantaneously. It's more of a goes up and then you kind of have like a leveling off where the market tries to digest, and then the market might decide to actually move lower or alternatively move further to the upside. So it's one of those things whereby you kind of got to look at the chart and don't assume that the market's going to do things. It often takes longer than you might expect for a market to actually move the way you want it to. So get rid of this line. It's getting my nerves. Right. So with the news at 8 AM today, based on the fact that we've got quite a shallow move with the bears here, to be honest with you, you can kind of, we've got this bullish move. Market's trying again. Could have been looking for the market to kind of try and retest these highs here around the 10,760 region. The market came up, sold off quite aggressively here. So what the important thing to note is that it kind of coincided with the moving averages that we've already got here. So especially the purple moving average has been kind of adding a little bit of support here. Broke through that level. The pink's done a fair job of it, so to speak, and it's come back to test this pink level again. So this is kind of an opportunity we might actually look at in real time now, where the market has, let's go to so we've had this quite aggressive sell-off, as we already said, so from 8 AM, 9 AM, all the way down, but it's kind of got a wick at the end here. It's showing a bit of price rejection there. A market's kind of floating here. It's like an indecision candle. The candle is within the range of the previous candle. It's an indecision. The market's not 100% sure where it's going to go. The market could kind of tip along horizontally here. It's going sideways. It could try and push up and trying to kind of target the resistance that you see around this area here at the 10,500 handle, and then on and try and regain his previous status, so to speak, up by here at the 10,600. Or it could just continue to go down. You could see like a dead cat bounce, the market comes up maybe towards this pink region here and then just roll over and continue downwards. But we are in a bullish trend, and the important thing to note that I noticed here about these moving averages, that you saw the market starting to sell off, and even though it was selling off, I wasn't actually going to expect it to go as far as it actually did, but it did. But as soon as it was getting around below the I'd say around the 540-ish handle, it kind of looked like it was ebbing and flowing. You got a little bit of resistance here, kind of the market's fallen 60 points there. We're in this uptrend here. There'll be some traders who will be focusing primarily on the trend line there, who'll be drawing it approximately like that, so to speak, whatever, and that would kind of coincide there with a 10,540 sort of region there. So the important thing to note is that stopped at the moving average, and the major thing that I was looking at was, as we've already said, the bullish trend that preceded. So we've got this market going up, it's got this low here, higher swing low there, it's higher swing low, higher swing low. So I was looking to see how the market's going to react based upon this, because if we start to break this level here, this 1020-ish region, I know the wicks are kind of distorting it a bit, but this sort of region here, so we kind of highlight that in a bit more for us. It is approximate, so we do that green. Okay, so if the market starts to break this level here, we would actually be kind of violating this kind of bullish trend here. The reason why is because you'll have the market closing and moving below this previous high low, so to speak. So it's kind of breaking the sequence there, where this would actually could be forming some form of exhaustion pattern then. So the market's making higher lows all the way down, it kind of pushes higher, exhausts, rounds off, and then you have the sellers coming in. You've got the people, the last ditch buyers coming in, a bit of profit taking there, and then you've got the people coming in short then also. But the market here has actually stopped just below that level, and you've got these long wicks. Now, you kind of be looking for a couple, I'd be looking for a couple more wicks here to kind of signify that this moving average is acting as dynamic support, but also that this previous low is not violated, so we're still in that bullish uptrend. If that's the case, if we look for the next kind of 2 candles here or whatever, we kind of got some opportunities from some smaller intraday opportunities, which I'll come on to now. But if we get those wicks here which are closing, where the candles are closing above this swing low, then we're looking to go long based on the fact that we look to try and target first of all, as we said, this region here, the 10,500 and then 10,600, the previous highs as well there up the top. So it's one of those opportunities where even if you did not get in on the short side, you can kind of now use the fact that the market's kind of not so much oversold, because it hasn't oversold per se, but it has had an aggressive move. It hasn't oversold in the sense that it hasn't violated our bullish move, and then you can try and get on that then in the counter intraday trend, so to speak. So that'll be an opportunity. If we go down to the lower time frames, I'll see what I'm on about by the intraday opportunities that we're talking about. Now the market's come down here, got these long wicks. Wicks are kind of a bit of an idea that there's price rejection, maybe an area of support here. But as I said in the previous video, you kind of got to look at how the market's moving as well. So if you, for example, have a move which is, let's get my brush there. So if we've got a market that moves down, and we have a candle with a long wick, assume that's a candle, as soon as this market closes and we've kind of got this idea where the long wicks are here, the body might be in the upper region of the candle, of the range, so we'd be looking for a price rejection around here, and we look to actually go long there. As soon as the next candle opens, I will not be looking to automatically go long. I will actually be looking for opportunities where the market pushes lower, so you can get lower towards the bottom of the wick, down in this region. And the reason why is when you're getting into a better price, we've already had recent confirmation that there's price rejection. Of course, there's no fail-safe strategy. There are times where you have a little bit of a consolidation, a little break whereby the market will do this, and then kind of, it'll just push further down. But if you're looking at these sorts of opportunities, what actually helps is time. So if you've had a large aggressive move, you see this happening, then kind of see how it goes. Markets, if they've had such an aggressive sell-off whereby they've just sold off 200 pips, it's unlikely that you're going to see the market start to move much higher within the next 15 minutes or even an hour. As you can see here, we've got quite a bit of a topsy-taily here. So, and for the intraday traders, they can actually be getting cut out. Now, if you're one of those that are quite aggressive, but having quite tight stops, you can be chopped about quite a bit. So you've got to actually be timing your entry even better there. So the market's coming down. You've got this here, this wick on the this large wick here on this candle, this tall candle here, and you might think, all right, as soon as the market opens, I'll go long. So you start as soon as this candle, you get long then at, what's that? It's 10.457 ish. And yes, you might make a little bit, but then the candle, as you can see, it makes an all-time, recent low of 10.431. So it kind of pushes you out of that there, especially if you had your stops just below this low of the previous candle. So you kind of got to look to time. So even if what I just said about targeting the lows, it can still fail. It's not a fail-safe. So the market comes down, you kind of get low towards maybe the 452, something like that, and the market pushes lower. Now that's about 15 pips. I don't know, depends on how your risk tolerance is. You might be getting in or whatever, but the important thing to note is, even if you've hedged or you've taken a small loss, it's not the end of the world, so to speak, because the market hasn't done a lot since. It's not as though you've been chopped out of a trade towards the bottom. The market's gone all the way back up to its previous highs. It hasn't done that. It's just ebbed and flowed. Now, what kind of I tend to see personally, let's get rid of that, especially in these kind of large moves, especially if they're counter trend, is that you'll have the market sometimes just have a second go. So the market's going to come down here now. It's tried to make a push up. You've had these wicks here also that have shown a bit of price rejection. It's not ready to go up yet. Now, of course, it could just tail off slowly on a positive gradient there and kind of realign with some Fibonacci ratios there. But you might also see that the market comes down and tries to kind of retest these previous lows, and you see quite often in these sorts of opportunities, especially when they line up with, if you go on the 1 hour, they line up with your longer term dynamic support resistance with your moving averages. That even though it's pushed below, it's holding that level, and you could still see it come down, because these larger candles, they've got more of these little ones in, and there can be more opportunities for the market to kind of ebb and flow at that level. So I'm not guessing, but I'm gonna make the view that I think that the market might actually come down again and try and target these lows a little bit here. It might not, but it might. I wouldn't be interested in taking the price on now as a long position. It's kind of teetering on the edge of not really doing a lot, and it can kind of drift against you with quite a few pips there. So I'd be looking for the market to pull down into this region, and if it does, and we kind of see that price action with some of the wicks there where it's trying to get below, but it's unable to get below this 10.440 region, 10.450 region, then I'll be looking to go long, and that's a more favourable opportunity based on the fact that this previous low is going to act quite a bit of support for us there. So that's the way. At this price here, I wouldn't really be interested. 10.468 is kind of, if the market starts pushing higher and you've got kind of a quick, you kind of go with it, and it's quite an aggressive move, then yes, go with it. But it's kind of, you got to be quite, there with your stop, so to speak, as well, knowing when to get out. So yeah, that's basically it's kind of just one little opportunity that we're looking at today. Join us tomorrow for our daily dose then. I don't know what we'll be looking